People dropping in the chat. Nobody dropped in the chat. All right, you ready for me? All right. So my name is Tiffany Haynes, and I am the Director of Home Buyer and Community Engagement. And I wanted to take the time to allow for my colleagues and some of our partners on the line to introduce themselves.
Yeah, my name is Flora Valdez-Stepena. Elizabeth, could you turn your volume down? I'm sorry. Sorry, me and Elizabeth are in the office together and she's having some audio troubles. My name is Flora Valdez-Stepena. I'm the Administrative and Communications Manager for Maggie Walker CLT. I handle all of our events, including virtual, in-person, Zoom, account management, MailChimp, Instagram, Facebook, Twitter, all that stuff is me. So nice to see y'all. And Elizabeth will be here soon. She's just having some issues.
Can we go to our partners on the line?
Hi, this is Viva Moore. I'm with Fulton Mortgage. I am the loan officer contact with Fulton Mortgage, and I look forward to hopefully working with you all throughout your homeownership journey.
Hi, this is Jen Cox with Jen Cox Realty. I am the realtor for the Maggie Walker Community Land Trust. I am available if you have any questions about the CLT process or any of our homes that are in the program.
Hi, this is Cynthia Taylor with Virginia Credit Union, mortgage lender to help you with your home buying needs, and I'm happy to be here tonight.
Now, was Elizabeth able to join us?
Can you hear me?
Yes, great.
Hi, I'm Elizabeth. I am the AmeriCorps Vista with the CLT, and I work with the applicants through the application process. So as you're applying, I'm the main point of communication and here if you have any questions about your application and things like that.
Thank you, Elizabeth. All right, so let's go into the presentation. All right, so these are two resources available to you, regardless of whether or not you work with MWCLT or not. Commonwealth Catholic Charities offers free one-on-one credit counseling services, and the housing resource line can also connect you with a number of housing resources. I'm going to pause for a moment. All right. Thank you, guys. All right. So these are some of the resources, and I'll pause for just a moment so you all could take, if you wanted to write those down, but those also will be available later on in the presentation. So as far as our agenda, we're going to be going over a few things. And please pardon me, because I will be looking off to the side because I'm using my monitor. So if it looks like I'm looking up, trust me, I'm paying attention. So we're going to be going over what a CLT is, some of our program details, and how to go about applying for our program, where we'll get into more about the application materials that you need and who you could reach out to. So now we're going to go into our survey or poll. Flora, if you can get that up and running, then that would also be great. you. You can let me know when just about everyone has finished with their responses.
Okay, I think we got everyone.
Thank you, Flora. All right. So right now it looks like I guess I'm gonna share the poll on the screen. If you guys can see that. Can y'all see that? So right now we have about 60% people who are, most of our participants in this poll are interested in purchasing a home. And then we have a good chunk of people who work in affordable housing, realtor on the line, and interested citizens. All right. Thanks for taking part in that. I have right now like elevator vibes, just like cool, relaxing, vibing. Okay. So what excites you about home ownership? And you can take the time to drop your response in the chat, or you can unmute yourself and fully engage in that way.
I'm sorry, this is Valencia Harris. Can I request that person representative from Virginia Credit Union information again?
You can. It will be dropped in the chat. It can be dropped in the chat.
Okay.
All of our lenders' information is on our website, which I'm going to put in the chat.
Perfect.
So Jasmine, thank you for sharing. Wanting to purchase a son for, oh Lord, not purchase a son. Please don't buy children. But wanting to purchase a home for her son. And no one else wanted to respond? Yes, thank you, Kathleen. Owning a home would mean freedom for my kids and I. Yes, that is so real. Fun fact. Well, not really a fun fact, but a real fact. People who are most first time home purchase. Okay, so my fact, not fun fact, but fact. But people who are most likely impacted by evictions are people with children, households with children. So home ownership is definitely like one of those things where you have children, being able to have that freedom of space, for your children to kind of like roam around. I have an 11-year-old, so I definitely knows what it feels like, where it feels like he's stomping a hole in the ceiling. So having that space for him to just walk and me not worry about if he's walking too hard. So that's definitely a thing. But Valencia, first time home purchase. No one else? Okay. We'll go to the next question. Katrina, I'm a realtor and I love helping clients to have the American dream. Yes, I'm currently working with a family member that I think would benefit from this program. Yes. Thank you, Katrina, for joining us. All right. Next question. What about home ownership makes you nervous or afraid? And you can unmute yourself, drop it in the chat. Don't be scared, y'all. We're in this together. Someone said affordability and money required to purchase. That is so real. That is so real. Someone else said, this is from my client, yes, Katrina. And then Michelle, taxes, escrow, and interest. That makes sense. Yes, cost of fixing a home and fixing repairs. That is also a reality of home ownership. So now we're going to go into, someone else said both of them. Thank y'all for engaging in those questions. So now that we've done that, I'm going to go on to our next piece of the presentation. So I want to go over a little bit about Maggie Lena Walker. Maggie Lena Walker is the first Black woman to establish a bank and the first to serve as president of a bank in the United States. Not only was Maggie Lena Walker an amazing businesswoman, she lifted the community with her. She empowered Black families and created opportunities for them to have stability and economic mobility. She was innovative and a visionary community leader. Maggie Walker not only had an impact on creating opportunities for her community, she made intergenerational investments. She paved the way for not only Black business owners and community leaders, but for women who at the time were not deemed worthy of having a seat at the table. So now we're going to go into what is a community land trust. A community land trust is a way to help families afford home ownership now and in the future. A community land trust reduces the cost of home ownership and keeps a home affordable for future buyers. Community land trusts are basically a nonprofit organization governed by a board, CLT residents, community residents, and public representatives that provide lasting community assets and shared equity homeownership opportunities for families and communities. CLTs also develop rural and urban agriculture projects, commercial spaces to serve local communities, affordable rental and cooperative housing projects, and even conserve land and urban green spaces. However, the heart of the work is the creation of homes that remain permanently affordable, providing successful homeownership opportunities for generations of lower income families. So, all right. All right. So I talked about its affordability, and the goal is really to provide affordable homeownership opportunities to families for now and in the future, and reducing the cost of homeownership. So CLTs were developed in the US, and there are currently over 350 of them, actually. There are over 350 community land trusts nationwide, which evolved out of the civil rights movement. So this first CLT was actually in Albany, Georgia. And how it evolved out of the civil rights movement were that Black citizens who were sharecroppers were getting kicked out of their homes if their white landlords found out they had registered to vote. So Black activists bought a large farm, and the intention was to farm the land together while everyone owned their land. Owned their homes, I'm so sorry, while everyone owned their homes on the shared land. So here, we're gonna go into a little bit about what does it mean, or what's the process for purchasing and reselling your home, like a brief overview of that. So, I'm so sorry. So when you buy the home on the conventional market, you're purchasing the house and implicitly the land beneath it. But with a CLT home, you purchase the home, but the land remains in the trust. So you lease the land and you use it in the same way as anyone else would. So when it's time to sell the home, you're also selling the home, and the land remains in the trust as well. The next buyer will need to meet the income requirements and buys a home from you at an affordable price. They agree to the same sort of resale structure when they sell it. And that is how the home is that is how the home is sold from buyer to buyer as long as it exists. So what are some of the benefits of CLT home ownership? So the CLTs benefit the homeowner in several ways. They are some of the most affordable homes you'll find in the Richmond area. And by affordable, we mean that they are ready to move into, not fixer-uppers. And all of these homes have been recently rehabbed and newly constructed. The CLT allows for the homeowners to build wealth over time, through their monthly mortgage payments, and the way that these homes increase in value with wages instead of the market. Support and assistance for the homeowners are all of the other benefits of home ownership, along with all of the other benefits of home ownership, like pride, stability, and a quality home. All right. So CLTs also benefit the community by improving the availability of quality, affordable homes. Most of our homes have been built on formerly vacant lots or are older homes that have been rehabbed. But the main advantage for the community is that no matter how expensive a neighborhood gets, there will always be homes that are affordable to people making low to moderate incomes and will help keep our neighborhoods diverse and vibrant. So now we're going to go into who may want to purchase a CLT home. All right. Right. So these are the income limits. So as an overview of who may want to purchase, I'm so sorry. As an overview of who may want to purchase a CLT home, one would be you would want to be income qualified. 2, agree to the terms of the ground lease. 3, qualified with a lender who will lend for a CLT home, which we'll discuss later and is also available on our website. And also, you cannot own a home at the time of closing when you're going through our program. So these are the income limits. It's based on numbers of people who will be living in your new home when you purchase it. There are 2 income limits, and this is based on funding and varies from house to house. You cannot make more than this to be eligible to purchase a home. And you will see that this is based on area median income, where you see on this chart is representative as AMI. And these numbers are determined by HUD for each year. So for example, if you have a household of 2 people, the house you want to purchase has 80% AMI income limits. You cannot make more than $57,600 in order to qualify for a home. And as you see, it's based on the number of people in the household, and the max is the 115% AMI. But in our program, we do have homes that fall either under the 80% or the 115. So people who qualify for 80% would also qualify for the 115%, simply because it's based on restrictions by the funders rather than us wanting, people to not have access. And people who qualify for 115, under the 115, would qualify for the homes that are 115% area median income. So these are some of where our homes are located. As you can see, we have a large portion of our homes in the Randolph and Churchill area, as well as Chesterfield, Northside, and Holland Springs. And I also would like to pull in a plug for Jen, our realtor, to give a little bit of descriptor around like some of our homes in those locations.
Okay, yes. Thanks, Tiffany. So currently in our Churchill area, we have a coming soon home on Venable Avenue, which is 2-story, 2-bedroom, 2 full-bath, single-family home. We also have a 2-story single-family home that we sold, I believe it was 2 years ago, and that's going to come up later on in the slides, on North 26th Street. That home was 3 beds, 2 baths, and it sold for $227,500. Chesterfield County, we recently sold a home, 2-bedroom, 1 bath for $135,000. And we have a coming soon listing in Chesterfield. Henrico, Highland Springs area, we don't currently have anything active or coming soon. Please correct me if I'm wrong, but I don't believe we have anything coming soon. But we recently had one go under contract about 2 weeks ago, and that was a 3-bedroom, 2 full-bath, 2-story home. And let's see, Northside, we don't have anything right now. Randolph, we don't have any listings right now. And then, of course, in our Chesterfield community, we have the new construction project that's currently going on right now. And that's all I have.
Thank you so much, Jen.
You're welcome.
Jen is like a super helpful resource. If you don't have a realtor, get with Jen. If you have a realtor, Jen is always happy to support you all. So Jen has definitely been a great asset to our program and our interested home buyers. Thank you, Jen. So how does our program work? So most of our program is shaped by the ground lease. So we're going to go over some of the basics. So the ground lease is a 99-year lease that's intended to go beyond yours and hope maybe those of that of your children. It's also fully inheritable. Your home can be passed down passed down to anyone via your will or your heir by state law. All right. So your home can be passed down via your will or via your heir by your will or your state law. And at closing, MWCLT also provides wills to all home buyers, offers wills to all home buyers during the closing process free of charge. In addition to that, if your heirs choose to live in the home as their full-time residents, they will either continue on their current ground lease or may have the option of starting a new ground lease. So if your heirs don't want to live in the home, they can sell it and get the same proceeds from the sale as they would have if you had sold the home before passing away. The ground lease fee, there is a ground lease fee, and that ground lease fee is $100 a year. You will be invoiced directly from MWCLT 4 times a year, or you can pay that in full in one chunk. And this isn't a part of the escrow. So that would be something separate. Now, that would be billed in quarterly installments, so every 3 months, in either $25, like I mentioned, or per quarter, or that lump sum if you would like to pay that in advance. The board of directors can also raise the ground lease fee any year ending in 0 and 5. But they are limited in how much they can increase it. So they are only allowed to increase it at the same rate as the increase in some consumer price index, and it can never exceed that $250 a year. So what that would look like is on year 0 or 5. On year 0 or 5. So now the next year that they can actually implement an increase would be 2025, since there was no increase implemented in 2020 due to COVID and their decision to not increase the ground lease fee. Now, this is also an opportunity for me to share a little bit about our board of directors. So the Maggie Walker Community Land Trust is ran by a board of directors that's composed of 1/3 homeowners, 1/3 public members, and 1/3 community members. So if you're considering MWCLT homeownership, I hope you will consider joining the board when we do have any openings, or serving on one of the committees that advises the board in their decision making. So what makes MWCLT homeownership unique? So it must be your primary source of residence. For example, let's say you meet someone and decide to move in with them. You would need to sell your MWCLT home so that it's an opportunity for another family to own their home. You can't turn it into an investment property and rent it out. But there are exceptions to this rule made on a case-by-case basis by the board. Some examples may include military deployment, or even a family situation that may require you to be out of your home for an extended period of time. So an example of that is if you have to caretake for your mother or your grandparent or a relative who's ill or who's in need for a caretaker, and you have to spend extensive period of time out of your home. That would be an example of what that would look like. Now, the next thing is renovations do have to be approved by the board. You can move into your house, paint your house, change your hardware, light fixtures, everything. You can hang TVs up, install shelving. Those things that when you rent, you cannot do because it's your home. You are able to do those things. You put a fence up, put a shed on skids. But the renovations that we're generally asking for you all to get approval for are the ones that require you to get a permit from your local jurisdiction. So examples of those things would be taking down a wall, or putting on a deck, or things like that, because one, we want to make sure that anything done to the home is done well and will be safe for the future homeowners. And then two, we want to make sure that any renovations are going to serve future homeowners. Like, just because you like bowling doesn't mean everyone would appreciate if you converted your first floor into a bowling alley. So that's that. The next thing is you will build equity. You build equity from your down payment, your monthly mortgage payment, and your home's increase in value, which is based on area median income. And instead of instead of on like what the market does, which is really unpredictable. We'll go through an example of this in just a little bit. So give me a moment. I try to keep up with my clicking. Hopefully it's helping. All righty. So now I'm going to open up the floor for questions. But before I do that, I want to give a little descriptor of the home that's in this photo. So this is a home that we have here in Highland Springs that was built by Project Homes. It has 3 bedrooms, 2 baths. And I'm not sure if Jen is able to provide any kind of price point for what this home ran for.
Yes, Tiffany, this home sold for $155,000 and it's 1,200 square feet.
Thank you so much, Jen.
You're welcome.
Now, do we have any questions?
Don't be shy.
And Kendra, I'm not sure if you heard us say this or if you asked beforehand, but it is a 3-bedroom and 2-bathroom home.
I'm going to put a link to the chat, a link in the chat to the posting on our website about this home, because there's some more pictures and information there if you want it. And you can also find other homes on our website as well. If you have questions, feel free to unmute yourself or put them in the chat.
So someone had a question. Kathleen, you had a question about the income limits. Would you like to unmute yourself and ask that? Kathleen? Can y'all hear me?
Yeah, we can hear you.
Okay.
Katrina, to answer your question, the new construction in Chesterfield is near Ettrick, down near Petersburg.
I'm unmuting myself. To be a part of the board, do you have to be a participant in this program, or do you have public, I'm a realtor, to be a part of the board?
No, you don't actually have to be a homeowner. There is 1/3 public members, which is basically just folks from the community. That includes some former homeowners and some, realtors and other such people involved with, the real front lines of stuff like this. I'm sorry, community members. Those are the community members. The public members tend to be the, our partners in the like Association of Realtors and other developers and such. But our community members are generally non-industry, non-homeowner folks. So yeah, definitely if you're interested in joining the board, let us know.
Who would I contact? Could you give me just after this, who would I contact?
You can just send an email to me. My email is flora@mwclt.org. I'll put it in the chat for you.
Okay, great, appreciate it.
Yeah, of course. And we have some questions about credit and income limits. Kathleen, marital status is not factored into the income limit. The income limit is based on how many people are living with you. That includes all adults and children who will be living with you, regardless of marital status or anything else.
And the income of the children under 18, I don't believe it's considered.
Yeah, that's correct. Income of your dependents, as long as they're under 18, is not considered as part of the household income. And then someone asked how credit comes into play. Credit comes into play with the lenders. So Maggie Walker doesn't check your credit on our own, but our lenders do, and you do have to qualify for a mortgage in order to qualify for the program.
And if any of our lenders would like to kind of give a projection on where at minimum our applicants would need to be, I know that's based on the lender. So we have, I think, 2 lenders on the call, if you all wanted to.
Yes, this is Cynthia, Virginia Credit Union. So the minimum credit score to qualify is 620 right now. So that will get you qualified for, you know, as we say in the world, you know, just get you through the door. But of course, we need to analyze credit, debt to income ratio, et cetera. But the minimum credit score is 620.
Hi, this is Viva at Fulton Mortgage. Is the same thing that applies with Fulton Mortgage. Minimum credit score 620. However, we do have some flexibility for folks who may not have credit established, solid rental history, on-time rental history, on-time payments with utilities and resources such as cell phones that could potentially help supplement the credit report as well. The 620 is the minimum credit score if someone does have a credit score.
Thank you both for that. We have a few more questions in the chat, I believe. Or did you want to?
Yeah, these sound like lender questions as well, about down payments and interest rates. So how much is needed for a down payment and closing costs, and what are the interest rates like?
So this is Cynthia again, Virginia Credit Union. So if you qualify, we can look at getting you down payment assistance where you can do 100% financing. Also possibly, you know, open up if you're eligible for grant funds as well to help with closing costs. So we would look at all of that when we pre-qualify you for the mortgage.
And this is Viva over at Fulton Mortgage. We do require 3% down with our program. However, 100% of that down payment can come from either grant funds, and we do have some funds in-house. We have up to $7,500 in grant funds available in-house that can be combined with other resources. So the down payment can come from a combination of grant funds and or gift funds. And the other question was about interest rate. Interest rates are going to vary depending on any given day. The market has been pretty volatile today. Things relaxed a little bit, but the rates are going to vary depending on the credit circumstances with the client.
And which one of you guys mentioned the taking other things into consideration with credit issues?
That was me, Flora. So Fulton Mortgage, we do have a manual underwrite process where if someone does not have a 620 or it's, let me rephrase that. So 620 is the minimum benchmark credit score. But for someone who has not established credit or might have a thin credit file, just meaning very minimal trade items, as long as there is a credit score of at least 620, then we'll use that. But if that score is not there, then that's when we can use rental history, utility payments, even things like streaming services, cell phone payments to supplement the credit report. Does that make sense?
Yes, and that was Viva from Fulton Mortgage.
Yes.
Okay. And then what is the typical time frame for the process? Elizabeth, is that something you might be able to answer?
Sure, it really just depends. A lot of it is dependent on just what houses are available and when they become available. But in terms of getting your application in, some people do it in increments and submit their income documents and see if they even qualify for our program, if they're in our income limits before getting a bank pre-qualification. And then other people are already pre-qualified and then submit all of their application material at once. But a general rule of thumb, I like to review applications pretty quickly. So within a week, definitely. Usually it's going to be much quicker, but within like 2 to 3 days of submitting in your income documents, I should know if you're eligible for the program. And then the rest, we require your pre-qualification from your bank, and then a home ownership course. Those can sometimes take a bit longer.
Thank you, Elizabeth. Katrina wants to know how you can see available homes. Available homes are shown only to the approved applicants first. And so if you want to see homes as they become available, start your application and get into the pool, and we'll let you know when there's homes available. And then if none of the approved applicants make an offer on a home, then we list it publicly on the MLS, which is when you would be able to see it if you weren't an approved applicant. And then the new construction in Chesterfield we mentioned is in Ettrick, which is in South Chesterfield near Petersburg. And we expect that to be complete sometime next year.
Thank you, guys. Thank you so much. That was nice. Did we have any more questions? And then I can. Where do you get an application? We're gonna move into that further in the presentation, but you can go to our website. Laura dropped it in the chat. All right. Okay. So how does CLT homeownership compare to renting? So as you already know, when you rent your home, you don't keep any of your rent payments. And when you move to another home, this chart is simply, I'm so sorry. When you move to another home, when you rent your home, you don't keep any of your rent payments when you move to another home. So this chart here that I'm about to share is simply a representation of your monthly rent payment multiplied by 12 months, multiplied by the number of years you are in your home. So for the purpose of this example, we're going to look at you paying $825 a month in rent after a 5-year period. After that period, you spent $49,500, close to $50,000 in rent. And you don't get any of that back. Now, with home ownership, you keep all of the equity you earn by paying the loan principal with your monthly mortgage payments. This is an amortization schedule. If you like numbers, you can Google amortization calculator and put in your interest rate, amount of your loan, and the number of years. You can see how this plays out with different scenarios. For the purpose of this example, we're going to look at the home that was purchased in January 1 of 2019, where this person purchased a home for $145,000 and put down a 3% down payment. We choose this example because your monthly payment would be about the same as that $825 a month in rent. So notice that after the first year, the total you pay to the bank for your loan doesn't change. You have to pay the same amount every year. What does change is what goes into principal and what goes into interest. So as you pay down your principal, which is the amount you borrowed from the bank, this starts to shift. so that more money starts to go into principal and less into interest. Can one of the lenders tell me what would happen if a person put one extra payment towards a year towards their principal?
Hi, Tiffany. This is Viva Moore. So adding an additional principal payment per year consistently tends to shave about 6 to 7 years off of the mortgage. And that results in saving thousands of dollars in interest over the lifetime of the mortgage. And it pays
Thank
the
you.
loan off quicker.
I'm sorry, can you hear me? What'd you say?
No, I just said that it pays the loan off quicker. It cuts about 6 to 7 years off of the mortgage, so it's paying the loan off faster.
Thank you, Viva. Thank you for sharing that. If there's anything else another one of our lenders would like to add, or we can just. Michelle dropped in the chat, is that one full payment or an increment?
One full payment per year. So for example, if not just the principal and interest, but whatever the total payment is. So if the total regular payment is say $1,200, then having that $1,200 payment added as a one-time payment per year. I usually suggest tax time. If you tend to get a tax refund, then you never miss the money, right? Or if it's done as a lump sum, but the main thing is that it's done consistently throughout the lifetime of the mortgage.
And I'd like to add a question just to kind of like probe. What would that impact a person's loan if they paid anything in advance?
Okay, if adding an additional payment is going to impact the loan?
Adding additional payments, like paying off their loan prior to the maturity period or the loan term.
The benefit is aggressively paying that loan so it's paid faster. So it's only a benefit in doing so, unless there was a prepayment penalty, and that's pretty much non-existent in today's world. But I mean, it can happen, but not with the lenders that you guys have. There are no prepayment penalties with these types of loans. So it's all benefit. Does it make sense?
Yes.
Okay.
Just a probing question for people.
Okay.
Thank you so much for that.
No problem.
So in addition to what Viva just shared, it would also start to shift the balance between what's going into interest and what's going into the principal sooner. So for the purpose of this example, though we aren't assuming any extra payments, this person is just paying their mortgage on time and just the amount due. After 5 years, they have accrued $16,225 of equity just from paying their mortgage on time. If the buyer were to sell, at this point, they would have that $16,255 of equity that they have paid into the house. Instead of paying rent plus the increment in the value of the they would have that instead of paying rent plus any increase in the value of the house based on the increase in the area median income over that 5-year period. So instead of dishing out that $49,500, they would have earned a $16,255 in equity, and in addition to their principal and the increase in the home's value. So here, this is just another visual representation with the blue box. If the buyer were to sell at this point, like I had mentioned, they would have that equity and additional monies. All right. So for those of you who don't like numbers as much, this is a graphic representation of how your mortgage works. So this big blue box represents what they are paying to the bank each year for a loan. And it's the same concept for your monthly mortgage payment, just a smaller number. So in year 2, most of your money is going into interest, with about 1/4 going towards your principal. And you see that represented up here. That $6,856 is your interest payment, and the $2,000 as your principal. In year 15, you're paying the same amount over the course of the year, but about half is going into your principal and half into your interest. So that shifts year 15. Assuming you still haven't paid your mortgage in full by year 25, if you didn't add any extra payments to your principal each year, most of your money is going towards your principal. These concepts hold true for most mortgages, not just mortgages for CLT homes. So this is that visual representation. So, so far we've been able to talk about the money you've borrowed from the bank. Another part of your monthly mortgage payment is called escrow. And as a homeowner, you also have to pay for insurance and taxes. So usually these are due every 6 months, and they can be a pretty large sum of money. So the bank wants to make sure that you pay both your taxes and your insurance, because if you don't, you can lose your house. So instead of making you pay it twice a year in a big lump sum, they divide it up into an amount that you can pay monthly. These become a part of your monthly mortgage payment and goes into an escrow account. Then the bank uses your escrow account to pay the insurance company and the city or county where you live. This green box is your escrow, while what you are paying to the bank for your loan doesn't change. The insurance and taxes can fluctuate. This is what can make your monthly payment go up or down from year to year, but it won't fluctuate as much as if you were to rent over that same period of time, generally speaking. So this was actually the first CLT home in Churchill that was developed. Well, the first CLT home that was developed, and it's in Churchill. It's a 3-bedroom home with 2.5 bathrooms and a double veranda on the back. Jen, can you give us a plug for that price point, please?
Yes, this house sold for $227,500. And it was 1,680 square feet. It is 1,680 square feet.
Thank you. And can you share about what the price range is for homes now?
So in this area, the price point has definitely increased. Homes are selling in between $400,000 and $500,000 in the Churchill area.
Thank you
Jen.
so much, Jen, for that.
And I just dropped a link to the more information about that house in the chat as well, if you want.
All right. So now we're gonna go into taxes.
Did anyone have any questions?
Oh, sorry.
The homes do come with appliances, yes.
Yes, they do. We don't strip you of all the goodness. Their homes, like literally, you don't have to fix anything up. When you move in, it's ready to go. Any changes that you make is because of personal preference rather than a necessity. So the homes are nice quality homes. You know, when I walk in them, I'm like, when am I gonna pack my stuff up and move in? Like, shoot, shoot, like I'm ready, like, because they are so nice. So yeah, I think you guys will be excited once you get your applications in to start seeing some of the homes that become available. And what they're nice refrigerators. I done seen some of the sinks. They have like little nice like pull out spray nozzles. Like shoot, have a water hose fight, but you wouldn't want to do that in your home. But they're nice, you know. So yeah.
Don't forget to mention, Tiffany, the homes come with part of the appliances are washers and dryers as well, which is a perk.
And they are nice size. They are nicely sized. So
yeah, front loaders, stackables. That we sell front loaders and stackables. Yeah.
Yes. And Jen is like our open house queens. Like she usually gets front row seat on all of our homes. So listen, look, I'm telling you. And recently we've had a few homes with some really a few homes that recently been developed with some really nice porch space. Like you can throw a whole cookout, you know what I'm saying, and still have like your little backyard space to work with. And the front porches, you can sit if you want to be a stoop kid and sit on there and watch the neighbors walk past. Go ahead and do it because it's your porch, it's your home, and you get to enjoy it.
The one I'm putting in the chat in particular has a really nice porch that I like, and is a historic renovation, which is really gorgeous.
There's a question in here in reference to leaving appliances if you sell. Did you want to answer that, Jen, or did you?
So yes, because the appliances will convey with the home. Yes, because of how the program is set up, it's kind of, as Tiffany mentioned earlier in this, during the call, it's a pay it forward. So all of these appliances are provided at the time of purchase. So when the next person come in, we like to pay that forward as well.
But you still profit from that sale. So it's not like you're giving it, Yes. Okay. Did we have any more questions? Y'all don't be scared. Right. So I'm going to go to the next slide. So let's go to taxes. Tax deadline about to hit. So it's nice time to put a plug in. But you are responsible for the taxes on your home. I'm sorry. You are responsible for the taxes on your home, and but you're not responsible for the taxes on the land. I'm sorry. All right, so you are responsible for the taxes on your home, but you're not responsible for all of the taxes on the land. The taxes are deductible if you itemize your tax returns. But because MWCLT operates as a land bank, the land is tax exempt. So there's also state legislation that says that CLT homeowners cannot be taxed on the full market value of the home. They can only be taxed on what they can sell for the home for according to the ground lease. And this is another affordability feature, especially in high value real estate markets. I see question in the chat. Do you have programs to help with credit issues? So one of the resources that I shared at the inception of the presentation was Commonwealth Catholic Charities. They have a credit resource, credit counseling. And I do believe they also have a, I'm so sorry. I do believe they also have a credit boot camp program. Like Commonwealth Catholic Charities has additional resources, but I know one of the resources that we connect our applicants to is their credit counseling. So that Flora dropped that in the chat. Does that answer your question in full? And I hear they're a really good program, not just because, you know, we share that resource with you all, but like from hearing actual testimonies, like feedback from people who went through their program. All righty. Okay. So now we're going to go to maintenance. So as far as maintenance, you are responsible for the upkeep of your home, unfortunately, and any necessary maintenance. So fixing any broken appliances, a leaky roof, broken window, and etc. Those are some things that you would be responsible for when it comes to maintenance and upkeep. So what happens when you sell your home? Let's talk about the money in the process. All right. So this is where you'll want to pay close attention and where we're going to go through an example of the resale formula. So when you sell your home, you're entitled to get back cash equity, which is your down payment, earned equity, which is the loan principal you pay off by making your monthly mortgage payment, and your home's increase in value. And this, as you see, is based on the percentage increase in the income while you own the home. So this is actually a real home in our program as well. All of the homes in our slideshow presentation are actual homes in our program. So as we go through them, I'm going to give you a little plug. Jen's going to fill you in on some information around those homes to kind of just give you a gist of the variety of homes that we often offer. So this home was sold in the Randolph neighborhood, and the home appraised for $215,000 and was sold for $145,000. So the home buyer borrowed less and had lower monthly payments and a lower down payment than they would have had they had purchased this home on the market. When you go to sell your home, we start with your original sales price, which is $145,000. We calculate the increase in AMI while you have owned your home, the years this home was purchased. The AMI was $83,000. And when they go to sell their home, we estimated that the new AMI would be around $90,200. So the AMI had increased on average around 2% a year in the Richmond area. In this scenario, over the 5 years, this person has lived in their home. The AMI had increased by $7,000, which is 8.41%. So we multiplied your original sales price by that 8.41%, which equals $12,200. And this will be the $12,200 will be the equity that your home had increased in value, plus any down payments you put into your home, plus any principal that you've paid through your mortgage payment. So the equity would be $12,200. Then you'd add your down payment and your principal that you've paid throughout the mortgage payments. Though historically, this has not been the case, if the AMI decreases while you live in the home, you'll be able to sell your home for what you purchased it for. So the value of your home will never decrease. And that is another pro. That is another pro of purchasing a home through our CLT. All right. So as a reminder, this is an example of the amortization schedule that we went through earlier. The homeowner has accrued $16,225 just by paying their monthly mortgage payment. And that is instead of like that almost $50,000. So in this example, after 5 years, they have $16,225 of earned equity, plus that $12,200 from the increase in the value of their home. And that gives us a total of $28,425 of equity, which is what they earned in equity over that course of period of time. So if a person had been renting, if a person had been renting over the same 5 years, they would have spent that $49,500 in rent, not getting that back. But over that same course of time, they instead were able to accrue almost $30,000, so $28,425 to be exact. And so here's the visual representation of that. As you can see, you earn some instead of losing some, or a lot instead of losing a lot. So the CLT model makes it possible to keep this home affordable for future families who may be in the same economic situation you are in right now. So again, we take that original sales price of that $145,000 and add on that $12,200 from the increase in the value of the home. And the home would resell for about $157,200 plus some fees. So the CLT model, this is, I'm trying to keep up with my clicking so that y'all have it. Sometimes it goes slow, but here we go. So this is that visual aid for you all. And that 145 original sales price, plus the increase in the value of the home based on the area median income. And that's how the new price for the MWCLT home is calculated for a future home buyer. Plus any, additional fees, and usually not of that associated with like us collecting any money, but more so any fees that goes into the process of resale. And then we have another beautiful home. This is a home in Chesterfield, and it was rehabbed and sold for around $133,000. Jen, did you want to like put a plug in for the landscape of the home, some of the details on?
Yes, this home has 3 bedrooms and 1 full bath, 1,056 square feet. And actually, Tiffany, is sold cheaper than 135. We had a list price of $131,750 in Chesterfield.
Wow.
Yes. Yes.
Thank you. Thank you.
You're welcome.
All right.
There is a question in the chat. Sorry. We do have a question in the chat, and folks can ask other questions if they want.
We can take a pause for questions. That works.
Can 2 individuals purchase a home together? Yes. 2 people can purchase a home together. But your combined income has to be less than the 2-person income limit. As for credit, I will let the lenders talk about that.
Hi, this is Viva Moore with Fulton Mortgage. Yes, both parties would need to meet the minimum credit score requirement.
And is it possible, sorry, just to clarify, is it possible for one person to not be on the mortgage but still move into the home?
Oh, absolutely. So in this example, say a couple buying a home together, one person can absolutely not go on the mortgage if their credit scores are not up to par, but the other person can qualify for that mortgage, both based on credit and income. We still look at household income. And for this portion, I can only speak for Fulton Mortgage. We're still going to look at household income. So even if that other party is not on the mortgage, we still have to take their income into consideration to make sure that the income does not exceed the guidelines for the program if there is an income limit. Does that help, Flora?
Yeah, thank you.
Okay.
Thank you. Do we have any more questions?
Not sure if
Oh,
not sure
go
if
ahead.
Virginia
I'm
Credit
sorry.
Union might have any comments. Cynthia, do you have anything that you want to add on that?
Sorry, I was muted. Yes, as far as Virginia Credit Union, it's going to be the same as far as both applicants. If you have one borrower that has a stronger credit score, we would look at first to see whether or not, not adding the other borrower may qualify. If not, then it would be the fact that both borrowers need to have at least a minimum credit score of 620 in order to use that household income. And again, to mirror what Viva said, we do look at total household income, and that comes into play when it comes to grant programs to see whether or not we can get any type of grants for you to help with closing costs, et cetera. We do have to go by total household income to make sure you're not over the income limit. But if you want to do the mortgage, just under the borrower that has a stronger credit score, at least 620, then we can do that. But just keep in mind, if you want any type of, monies to help with closing costs, we would have to look at total household.
Thank you so much, Viva and Cynthia. Any more questions? All right, let's move into the next card. Okay. So this screen is a list of our lenders. We have Fulton Mortgage, Town Bank Mortgage, Southern Trust Mortgage, CNF Mortgage Corporation, and Virginia Credit Union. So now we're going to go into the application process. So as mentioned on the previous slide, Fulton, Southern Trust, Town Bank, Virginia Credit Union are the banks that we lend for our CLT home. Not that lends for our CLT program specifically, but will lend for CLT homes, period. Those are ones that we've identified that will. All right. So as far as the application process, the first step would be to participate in a homebuyer information session. So congratulations, you all have completed the first step. Now the next step would be to submit your application with the following information. That would be 3 months of your most recent pay stubs and or benefit statements. 2 of your most recent federal tax returns, and matching W-2s or 1099s, and 6 months of bank statements, which is also something that you would have to request from your bank if you don't already have those. And then also the next step would be to apply for a loan pre-qualification. And as mentioned before, you would want to use one of the lenders that was listed and that who will lend for our CLT homes. And then you would want to complete a home buyer, Virginia Housing or Housing Opportunities Made Equally home buyer education course, online or in person. And on this page is the link to the Virginia Housing home buyer education course, but I'm not sure if Elizabeth or Flora can share any details as it relates to the home one.
So to be eligible for the home program, they will give for assistance, they give down payment assistance and other grants through their program after completing their home ownership course. But you have to be under the 80% AMI limit for that program. And it is online and you can take it. They might be doing some in-person home ownership classes at this point. And then the Virginia Housing option, they have both online and in-person opportunities, and you can also be eligible for certain funding sources through the completion of their program.
Okay, thank you. And so after that, then you would have entered the application pool. And we typically, Elizabeth, can you speak more to the order of how people get these things gathered? Is there a requirement for an order or just getting all of those components in? Is that the most important piece of that?
Yeah, so since I'm the person who will be reviewing your application, and I see people submit various parts at different times, it's really what is convenient for you. Some people want to make sure that their income qualified for our program before going through the home ownership course or before getting pre-approval through their bank. Other people have been working towards home ownership for a long time and just heard about our program. So may already have a pre-qualification or other home ownership courses completed. So really it is where you are in your home ownership journey. We're here to help you along the process. And then so once you get completed with all of your income documents and your pre-qualification and your home buyer class, then you are in our applicant pool. And it's not first come, first serve. Once you're in the applicant pool, you will be alerted of homes as they become available. And then if you're in the income limit for a certain house, like we explained earlier, there's the 80% and then the 115 program. So if you're in the 80%, you can look at all of the homes available. But if you're in the 115 program, you can not look at the 80%, only the 115 programs. So it's a little bit, it can be confusing. But once you're in the applicant pool, you are able to look at homes. And then if you find a home that is within your budget with you like the home, you can put a contract on the house. And I think we might go into this in a bit, the buyer prioritization, or should I explain that now, Tiffany?
So we don't have the buyer prioritization on the screen, but if you wanted to touch on that, then that would be great as far as
I'll touch on that really briefly.
That applicant pool and the homes are made available.
Yeah, so it really depends. Sometimes we have homes become available and we have many different households that are interested. in the homes. Sometimes we only have one person interested. And then if you are the only person that puts a contract on that house and you're in our applicant pool, then you are golden. That is likely your home if you go through the process and everything looks great. But often it can be a bit competitive for a home. And in that case, we do not go to a first come, first serve situation. We use our buyer prioritization policy. And I'll send a link into the chat for that. And so the buyer prioritization policy is what we use to look at people's situations and make sure that we're promoting equity in our home ownership process. So we look at factors such as your family size in relation to the bedrooms of the home, if you're a single parent, head of household, if you've lived in public housing in the past. Those are just a few of what we look at, and we rank people. You get 1 point, however many things apply to you. And in the case of a tie, we will go with the people that make the lowest area median income. So it's a lot different from in the traditional housing market where the highest bidder gets the house. We're really not going that route, and we are trying to make it so that people who are not making the most income are getting homes that they need.
Thank you, Elizabeth. And in terms of there was something you said that dinged something in my head. But in terms of the home, like Elizabeth mentioned, everyone is notified who has a completed application, which is why it would be based on how many people submit an application for a particular home on whether or not the prioritization policy is implemented. So more recently, we had 3 homes that became available, and 2 of the homes, I believe, were the lower AMI. One of them was the 115, but one of the homes, we had, 3 or 4 homeowners who were interested in the home?
Yeah, I think 3.
Yes. So of those 3, we had to utilize the prioritization checklist to figure out who was the person, the family, who would be prioritized in the purchase of that home. And so that's basically how that works. Only if there's more than one person who's interested in that home and submits a contract. And as far as the closing attorney information and stuff, we usually follow up with you regarding the closing attorney. There is a closing attorney that we have a relationship with Fleckenstein, but you're able to also utilize your own closing attorney. The benefit of utilizing Fleckenstein with our program is that it would waive some of the fees, the development of the ground lease fee, the ground lease fee, the development of the ground lease fee, not the ground lease fee. So those are 2 different things, and it can be very confusing. But it would waive $395 fee that you would pay if you were to use a different closing attorney. And that process, it doesn't usually take so long. So as far, it depends. So some of our homes are, I guess, Jen, would you like to answer that question so that I did? Yes.
I can answer it for the Maggie Walker Community Land Trust homes. I'm not familiar with the Habitat or the Project Homes policy, but the CLT does pay both sides of the commission if we're listing the home. The of course, the seller has a due diligence to pay both realtors. Now, if it's a home that is, if it's a resale from the CLT, then the owner, and I may need you, Tiffany, and Florida, correct me on this part of the process. When we have a resale in the inventory, the current owner pays both sides of the commission. Is that correct, or does that come from the CLT as well? When we're doing like the resales, like in like the Randolph community, I know we have a lot of inventory in that community.
I'm sorry. So was that Project Homes? Like who exactly? I'm sorry, I missed.
During the resale.
Yeah, for the resale.
I believe that the homeowner can choose who they want to list the home, but I'm not sure exactly how the commission goes.
Right.
But we're still, I'm really new on the resales. I haven't gone through one yet, but
we haven't had many either. We haven't had many resales, but I can tell you for the homes that are coming through the program that are listed, the CLT does pay the realtor's commission on both sides of the transaction.
And I know right now we have one potential resale that may be coming up soon, but since I've been in my role, I have not experienced that. So I can follow up if you still would like to know the answer to that. We can follow up via email. But I would need you to reach out to me via email. And my email is tiffany@mwclt.org. Okay, that was a very detailed summary of the application process. So if you guys have any questions, don't be afraid to ask because that's why we're here. But in the meantime, I'm going to move to the next slide. So some tips to consider: register with home for your counseling services and access to down payment assistance. Keep a personal file of income documents to send to lenders and or financial counselors. Get income qualified with MWCLT before applying for a loan pre-qualification with lenders. Just because you don't want to apply for the pre-qualification and then time goes on, you know what I'm saying? And then you have to have your credit dinged again as it relates to getting pre-qualified. And I don't know what that time period typically looks like. Could some of our lenders put a plug in? One of our lenders or both of you will put a plug in for what that usually looks like.
Sure. The credit reports are good typically for 90 days. And this is Viva Moore with Fulton Mortgage. The credit report for the pre-qualification, that initial pull is good for 90 days. And that gives someone time to secure a contract. But the actual credit report expiration date is 120 days. So 120 days from the initial pull is when that report expires, and we definitely need a new report.
And in addition to that, usually people don't sit that long on our wait list. What's the average time frame, Elizabeth, you would say? I'm sorry. Sometimes my dialect comes out, haven't been to Jamaica in a while, but sometimes when I talk, some things, show up.
So how long are people on the wait list? Is that
yes? What's the average wait list time?
Oh gosh, it really just depends when our homes become available. And then if you are holding out for a certain home in a certain area with a certain price with specific bedrooms or requirements, it's probably going to be a little bit longer than if you're really flexible and want to move anywhere in the Richmond metro area. It really just depends on what your needs are and then how our pipeline is going. We've been a little bit slower than we would want to with construction during COVID and all of that. But I wish I could give a better answer, but it really just depends on lots of factors.
Right. And then also like availability of our homes too. I think you may have said that, Thank you, E. Or Elizabeth, I'm sorry.
He is fine.
All right. So another tip would be just stay connected with us. You know, you may find yourself stuck on something. Feel free to reach out to Elizabeth or myself, or if you feel comfortable reaching out to someone else like Flora, or maybe it might be a lender question. Just know that you have a community to support you through that process. So yeah. And lastly, do not wait to apply, because you wait to apply, the home is gonna fly. That's my little, my little thing that I'm gonna do. So hopefully, yeah, that made someone smile today. All right. So if you're interested, here are some next steps. You can find the application online, or if you're able to drop it in the chat again. I know we dropped it a little earlier, but you can find it at MWCLT.org /application. And then, or you could pick one up from the office, but please be sure to call someone so that we can make sure that we have a printed copy ready for you to pick up, and that someone is there to be able to do that. The next thing would be to collect all of your documents. That would include your income documents, your home buyer education certificate, and your pre-qualification letter. You will not receive a certificate for this info session. We keep track of who attends this session. And there's a quiz at the end where we'll be able to track who filled that out, and then also the registration, so to track who showed up and finished the course. So that's the information that we use to be able to identify that. And then submit your application and supported document through one of the following methods. So you can scan it and email it. You can fax it over. You can mail a copy, or you can drop it off. We've had people come and they're like, I want to drop it off. I want to see somebody. I have some questions. As I drop the application off, you are free to do that. If you want to, if you're a busy person and you'll prefer to scan it or fax it over, by all means, do that, whatever accommodation needs. The fax number is on the screen. And it's also on our website where the link to our application is. And the address is 203 North Robinson Street, which isn't far from the Virginia Fine Arts Museum. So if you want to stop by the office, we're in like the fan area. I guess you would consider that the fan area. I'm so non-directional, so it's funny when I try to give directions. But yeah. And so now this is again the credit resources and the housing resource line. So again, the CCC credit counseling, they will help you get on the road to get your credit right if it's not exactly where it needs to be, or just kind of give you feedback, and support as it relates to your credit. And the housing resource line, they have additional resources as it relates to housing, and they can connect you to additional resources like ways to expunge. I believe they also newly shared information around expunging an eviction off of your credit. In addition to, they may be able to direct you to like rent relief and different things to be able to address some other needs if you have any. Yeah. So, and this last screen, before we go into our lease to own program, is contact information for me Nikki, who deals with our homeowners and stewardship. I deal with our home buyers, potential home buyers, and applicants, as well as Elizabeth, who does a little bit more with, like, we work together with the application process, but she usually does your income verifications and some other, connects you to the other resources or things that you may need to be able to inform you on that process. Flora is just that all-around person who is just like ready to support. She usually helps us with our tech support, our event support, anything you think of, Flora got us. So, yeah. Then we have our homeownership bridge to own program, or our homeownership bridge program. And this is really designed to help participants get to homeownership ready within a year. Your rent is about $958 a month, and about half of that goes into escrow and an escrow account for when you purchase a home. So that's $500. And over that course of period of time, you would work with Commonwealth Catholic Charities and their credit counselors to be able to get you to a place where you're credit ready. And then it usually services households that make around 50% of the area median income. Median income. I don't know why I always say median. I just, Okay. So in order to qualify for this program, you would need to have a credit score of around 600 and able to qualify and unable to qualify for a conventional loan. So your minimum household income should be around roughly $38,320 in order to qualify. The maximum income must be below that 50% AMI. And you must be actively seeking homeownership opportunities and have a desire to live in the city of Richmond, specifically the Church Hill area. And again, the potential to be mortgage ready within a year. Now, we currently are not accepting applications, or are we still, we're not accepting applications?
No, not
Elizabeth,
this time.
take it away.
So we are still in the pilot program of our lease to own program, and we have no current homes available. So we might in the future, but at this point, we are not accepting applications.
Yes. So do we have any more questions before we start this poll? Don't be scared, y'all. Some of our participants.
That's okay, because I can actually see who logged on. So the poll is actually not necessary, but it helps. So I'm going to give this poll here, and it's just going to ask you if you're planning on applying, and then it's going to ask you a couple quiz questions, and these are not graded or anything, and it's not required. It's just an optional little thing to help us know if we did good on this session. So please answer the poll if you can, and if not, then thanks for coming.
Yeah. And don't be scared. It's only 4 questions. It's pretty reasonable. Nothing too bad.
Can you put it back up there? The questions?
The poll is currently active. You should be able to see it.
No, not on my screen.
Okay, if you're not able to see it, that's okay. It's not mandatory. You don't need to answer it. The questions are just, are you submitting an application? And then some trivia questions that are information that we went over in today's presentation. So it's not necessary.
It's really just to gauge how well we did in presenting the information. So it really helps us to be able to refine this presentation if there's anything that, I don't know, I guess maybe a little confusing, maybe we could figure out how to clarify that information. So that's what your feedback does for us. It helps us be better people presenting information. How many people we got for who filled it out for?
We've gotten 7 responses. Again, it's not necessary.
I think we only need one more person.
Yeah, I have the data for everyone who I have.
Yeah, I think everyone else is me, you, Viva, and is Jen still on the line? No, I think Jen hopped, so like 2 more people. Do we have 9 responses yet?
We're almost there. And Katrina, yeah, if you would like your client to receive the follow-up information, go ahead and send us their name and email address, and we'll make sure that they're recorded.
And Elizabeth, is it required that the participant sit in on the session rather than their realtor?
It is required that the applicant either attends a session or has a one-on-one with Tiffany or watches the recording on our YouTube channel. So if your client was here with you, please let us know. Otherwise, send them their information, our information, and let them know that they will be required to attend the session themselves, because it's really informative for them to understand our program and how it's different than other housing options.
Right. And it really also informs the process so that there's no miscommunication around how we do things and, you know, which direction they need to go in. So it's really just to help the applicant. And thank you for dropping our emails in the chat.
Yeah.
So,
sorry, I was just going to go over the quiz results.
Oh, go ahead. Go.
Yeah. So we have the results here. Few people planning on submitting applications right away. That's very exciting. Question 2, true or false, MWCLT homes are fully inheritable. They can be passed down to your heirs regardless of income as long as they'll use the property as their primary residence. That's true, and 100% of people got that right. So good for you guys and good for us. What equity will you get back when you sell your MWCLT home? Your down payment, the loan principal you paid off for your monthly mortgage payments, your home's increase in value, or all of the above? And the answer, of course, is all of the above, which most of you got right. So good for y'all and good for us. Question 4, how do MWCLT homes increase in value? Based on the market rate appraisal, based on the increase in the Richmond area median income, or they do not increase in value? And the answer is based on the increase of the Richmond area median income. The market rate appraisal is the thing that goes up and down and up and down and up and down, and you can make a ton of money or lose a ton of money on the housing market, and it's generally not good for folks. So the area median income is much more stable, which is why we do that. So yeah, thank y'all.
Thank you. So I think that's all we got, unless you all have questions. Then yeah. Let me stop sharing my screen and I guess open it up to any questions if you all have any. Can y'all hear me? Okay, great. I guess I've been a little soft-spoken this evening, so. Okay, no questions? Okay, y'all have a good evening. Bye.
Thank you, guys.
Thanks, everyone.
Mhm.
Have a good night.
Thank you all. Everybody have a blessed evening.
You too.